The Bionano Genomics stock is up huge today. As we speak, the stock market is still open. Nonetheless, the stock is showing over 70% growth in the trading day. And in this video, which is going to be a short one, we're going to talk about why it is happening and dive deeper into Bionano Genomics stock, where it stands, and prospects of the company in terms of finances and a number of different financial metrics. So don't go anywhere, let's get into this video. Alright, as you could see here on the screen, the Bionano Genomics stock was up over 70% at one point today, and right now it's still showing a 60% plus growth. As we speak, the stock price is hovering around $2.15 right now. This is a huge gain. If you look at the stock return over the past 5 days, this is showing 140% plus return. The one-day return, as we talked about, right now at one point was as high up as $2.97, but right now it's hovering around $2.15 to 17 cents. And the 1 month return for the stock price has still been a massive 172% return. But what has happened and why suddenly this stock has caught fire today in the stock market? So one thing for investors to be aware of, when it comes to Bionano Genomics stock, it is actually listed on NASDAQ. Nonetheless, in order for the stock to be listed on NASDAQ, there are certain requirements that the stock has to meet. One of them is that the stock should be trading over the price of $1 per share. And if a stock is not meeting that requirement, say within for the span of 30 consecutive days, then the company is actually being notified of that, and they're given a time frame, usually 180 days, to meet that requirement. Otherwise, there's risk that the stock might be delisted from NASDAQ. And in this case, if you go back and let's say, as you can see, I'm looking at the 1 month time horizon, the stock was hovering around 50 cents, 52 cents or whatnot. So it's been extended time. And this goes back, I believe, to 2019, that the company was notified that they have to meet this requirement. But one thing that has happened since then is that today, and exactly today, the company was granted an extension, another 180 days extension by NASDAQ to regain its compliance with the bid price rule. And this led to the stock price caught fire, and you saw that at one point was over 70% up today, and it's still showing 60% up today. It's being traded over $2 per share. So that was almost like a catalyst for the stock price. You could see here that the NASDAQ has granted that additional 180 days compliance period until June 28th of 2021. So that is the time frame that the company has to maintain and kind of meet its requirement to be listed on NASDAQ. In order for it to actually meet that requirement from a price perspective, it's not the fact that the stock price just goes over $1 in one session. In fact, it has to maintain that for a consecutive 10 sessions, and once that's done, they're kind of meeting that requirements and kind of reset the company's requirements setting is kind of reset when it comes to the price required for being listed on NASDAQ. Bionano is essentially a genome analysis company providing tools and services based on its software system to scientists and clinicians conducting genetic research and patient testing, and providing diagnosis testing for those with autism spectrum disorder and other neurodevelopmental disability through its Lineagen business. And their Lineagen has been providing genetic testings or services to families and their healthcare providers for over 9 years, and has performed over 65,000 tests for those with neurodevelopmental concerns. Alright, but let us take a closer look at the company in terms of its financial and a number of different financial metrics, and see where it is and where it's headed based on analyst estimates. As you can see here, when it comes to analyst estimates, the stock from a Wall Street perspective over the past 6 months has had a bullish kind of approach, whereas based on analysis from quant, it is having a bearish kind of approach to for investors. Looking at the company's revenue back in 2019, they had a total revenue of $10.13 million. It shows a decline compared to the year 2018 ending in December. As for December of 2020, this fiscal year in 2020, they're estimated to have a total revenue of $7.45 million, which is again showing a decline consistently since 2018, so it's going backwards in other words. Nonetheless, for the next fiscal year, they are estimated to generate $17.97 million based on analyst estimates in total revenue, which actually is considerable, and in fact it's almost additional 70% compared to what they earned in 2019, so that's quite decent. Nonetheless, the company is still loss-making, and in fact, as you look at their earnings per share, they're still showing negative. Their estimated earnings per share, if you look at the annual look here, for this year, it's estimated to be negative 41 cents per share, and for the year 2021, it is still estimated to be negative, but showing a negative 21 cents estimates. So let's take a look at company's balance sheet. The company's total current assets, the total current asset is showing currently $29.2 million, and if you compare that to their total current liabilities, which is at $24.8 million, the fact that their current assets is more than the current liabilities is a good sign. Means that the company has enough funds and liquidity to meet its short-term obligations. Now let's take a look at their total assets. Their total assets is sitting at $41.4 million versus their total liabilities that is showing $26.7 million. Again, a very healthy number for us to see here. Alright, so let's take a look at a couple of charts to again assess how this stock has been doing compared to the S&P 500 and where it stands from a valuation perspective. If you look at the total return for this stock, you notice that their total return in the past 1 year has been 23.15% compared to the 17.15% return for S&P 500 in the past 1 year. Now if you change the chart and take a look at how the company's trading 12 months net income has been, you can see the trading 12 months net income, which obviously is negative because it's a loss-making company, is going down and it's becoming worse and worse. So over the past 5 years, that's how it sits. We would also want to take a look at the price to sales ratio. So usually you want a smaller number here. As you can see, currently the company was for the trading 12 months was being traded at 13 times its sales, whereas it has definitely become pricier and more pricey over time. You see back in December 22nd, it was still hovering around 5 times the price of sales, but suddenly it has jumped drastically over the past 1 week and it's become more pricey. And the last metric that you want to take a look at is the price to book value for trading 12 months. You can see back in the time frame of April, this ratio went quite low, hovering around 5 times the book value for the company, but now it's almost at the highest that it has been for the trading 12 months, sitting at close to 13.44 for the price to book value. There you have it, folks, and a quick analysis of the Bionano Genomics company and its stock, why the stock price has caught fire today, and where the stock is and the company is from various financial metrics. Do you own shares of Bionano Genomics in your portfolio? What do you think of this company and its stock and its prospects? I would love to hear from you. If you found this video beneficial, please be sure to give it a thumbs up and share it with someone who might benefit from this video as well. And of course, don't forget to subscribe to Momentum Channel. Here on Momentum Channel, we post weekly videos about the stock market, investing, finances, and financial freedom. Thank you very much and hope to see you next time.